Hi, everybody. Welcome back to another edition of Insurance Explained with Andrew Perlin here in Howard County, Maryland. First of all, I want to thank everybody who's taken the time to like the channel and subscribe. I do appreciate it. Today, I want to talk about disability insurance. The bottom line is this. Everything about your household starts and stops with your income. Your car, your home, the things that you buy, the clothes that you wear, right? Without your income, you can't do anything. So we take the time to insure our cars. We take the time to insure our homes. We even take the time to insure our financial future with working with planners, and it's important. But if we don't insure our income, every financial plan that you have is contingent upon income. Everything that you buy is contingent upon income. And if you don't protect your income, this could be a big problem. So most people are thinking like, okay, I've got 6 months of savings in my account, so I should be okay. Maybe you need more than 6 months, depending upon the scenario. The thing is, we don't know how long these disabilities are going to last. So we want to make sure that we have something in place to help bring money into the household while you're convalescing, because the one thing that will not stop is your bills. So please bear that in mind. That's what I kind of want to talk about today. Here's how disability works. There's two types. There's basically short-term disability and there's long-term disability. Most people get short-term disability through their employer, and the short-term disability lasts somewhere between 13 and 26 weeks. And it's just simply designed to get you through a small little issue that you're dealing with that keeps you out of work. The problem with short-term disability is it's done through your employer, which means it's probably an employee benefit that the employer is paying for it. The benefit is taxable to you. But unfortunately, most disabilities do last more than 13 or 26 weeks. If it's going to last that long, the chance is going to last 2 or 3 years. So you really have to make sure that you have enough savings or deferring that risk to somebody else. That's where disability insurance comes in. So disability insurance, by its very nature, is designed to be more of a long-term scenario, usually from 90 to 180 days onward. And it could be a 2-year benefit, a 5-year benefit, a 10-year benefit, all the way to age 65. It just depends on how you set this thing up. But it's designed to replace your income. Now, no insurance company is going to fully replace your income. That's not the point of disability insurance. The point is to get you through while you're getting better, and then you get back to work. So you're not going to get 100% of your income replaced, most likely. But there's ways to get pretty darn close to it. Now, you can get this policy through your employer, no question about it. But if they are paying for it, the benefit's taxed, just like your income. If you're paying for it, then the benefit's not taxed. Once you go on benefit and this money starts coming in, it'll continue to come in until you are no longer disabled or until the benefit runs out. So when you're looking at disability insurance, the whole thing is, what is disability? What's the definition of disability? The main definition is something called own occupation. So own occupation means if you cannot do your job, but you can do somebody else's job, you can receive benefit and you can do the other person's job. So a good example would be like a doctor hurts the hands. They can't be a doctor anymore. So they lose their ability to do their job so they can receive benefit, but they can still teach at med school or they can still own their practice. They just can't do any of the work, right? So they can get paid to do the job and they can get paid from their disability policy. That's what's called own occupation. It is by far the best definition of disability out there. I highly recommend own occupation for the reasons that I just explained. The problem with own occupation is that it's expensive. Okay, so it's got to fit the budget, but that's what I would recommend any professional to get. The other side of the spectrum is called any occupation. What any occupation means is that even if you cannot do your job because of disability, but you could do somebody else's job, then you are not disabled. And then they will say, go and get that job and earn some money. For example, you could be that same doctor with any occupation. You can't be a doctor, right? You can't do your job, but you can be a teacher in a med school. Well, you're not disabled, and this policy is not going to kick in. You have to literally be, the example that I always use is you have to be, laying in a bed with tubes coming out of you to not be able to work. You literally cannot do anything. Then you will get your payout. This is the strictest type of disability out there because you can't do anything. It's also the less expensive one. So if budget's an issue, you choose between ONOC or ENEOC. Now, there is one in the middle, and it's called modified ONOC. And what modified ONOC means is that you can't do your job, right? But you can also not do anybody else's job, right? So now it's kind of like an ENEOC, where you can't do anything, but you can still get paid because you can't do your job. So that's the best part about the modified is I can't be a doctor. Okay. I'm not working, even though I'm able to do something else. I'm going to get paid for my policy. If I decide to take a job, then I'm not going to get paid. So that's the definition of modified own occupation. As an insurance agent, I try to stay away from any OC. Obviously, it budgets everything. So if you can't afford it, I get it. But at the end of the day, what I'm looking for is I'm trying to protect your income and trying to protect your ability to earn an income. So if you can qualify for own occupation, it makes all the sense in the world because you can, if you can't do your job, but you can do mine, you can get paid from your policy and still get paid from your new job. It is by far the most inclusive thing out there. Now, again, with disability insurance or even any life insurance, if you are paying for it personally with post-tax dollars, the benefit that you receive is tax-free. If you were paying for it with pre-tax dollars, the benefit that you're going to receive is taxable. So if you own it and paying for it, I would recommend paying for it with post-tax dollars. But hey, if you want to take the tax write-off on the front end, I totally get that. But that's how disability insurance will work. Now, there's a bunch of different things that you can add to this policy, like the elimination period. And all the elimination period is how long will you wait before the benefit kicks in? You become disabled on day one. Do you wait 30 days, 60 days, 90 days, 180 days, a year? That is called the elimination period. Then you have your benefit period. How long do I want to receive benefit for? A year, 2 years, 5 years, 10 years, to age 65, to age 67, right? You get to pick all that stuff. Do I want cost of living riders on there? Meaning I want my benefit to be increased by 3% or so every year to keep up with the cost of living. You can tack that on too. Is there some sort of residual benefit on there? Meaning if I'm partially disabled and I can't do my job fully, but I can do it partially, so my income comes down because I'm only doing a partial job, well, I can get a partial disability payment as well. These are all the things that you need to take into consideration. But when it comes to replacing your income, just understand disability insurance is not designed to replace 100% of your income. It's designed to replace somewhere between 60 or 70% of your income because the theory is we want you back to work. Now you're probably saying, yeah, but if my income is taxed and my disability benefit is tax free, I'm actually getting more money. That makes perfect sense. That's the beauty of the policy. The whole point of this policy, though, is to insure your income because everything about your life right now stops and starts with your ability to earn an income. Everything. Now, again, if you're smart and working with a financial advisor, which I strongly recommend that you do, they're going to say, hey, we're going to need to have 6 months of savings for emergencies. Love it. I get it. Makes a lot of sense to me. However, there's just no way to know how long your disability is going to be. So 6 months might not be enough. You may get disabled before you have a chance to save 6 months or a year or 18 months for savings. And more importantly, that's a pretty big number that we're talking about. Wouldn't you like to use that number and invest it for your financial future? The thing about disability is most Americans will have a higher chance of becoming disabled in your working years than you do of a premature death. That's a fact. So as much as we talk about life insurance and as much as we talk about we want to protect your income from that perspective, if you don't come home from work today, is there money set aside for your family? But the reality is that most people are going to live to life expectancy or beyond. The term policy that we had talked about in the past is just in case, but there's a better chance of you becoming disabled. Now, the other thing that I hear is that, well, I have workers' comp. Okay, great. But that's only going to cover you if you're hurt on the job. So if you're not hurt on the job, workers' comp doesn't play into this at all. Another thing that I want you to take into consideration is most people think disability insurance will only pay out on this catastrophic thing, right? That is not the majority of disability claims that we see. They come from minor things that have built up over time, and the next thing you know, you can't go to work. Maybe it's complications from a surgery, or maybe it's something that happened to you when you were younger, and then all of a sudden it just kind of manifests itself now. These are things that people just don't think about. They're thinking about, like, I get in this major car accident and I'm messed up. But most of these things don't happen that way. These are just regular illnesses, complications from things, and the next thing you know, you're out of work. And hopefully your employer is going to say, hey, no problem. Your job will be waiting for you when you get back, but I'm not going to pay you while you're not working. So this is where disability insurance will come in. So these are things that I want you to think about. Who needs disability insurance real quick? Self-employed person should most 100% have a disability policy. Somebody who's an employee but doesn't have disability insurance through work. And again, workers' comp is not the same thing as disability insurance. The bottom line is anybody who has a need to protect their income because their income is the life source of their entire financial world. If you fall into that category, and I hate to say it, everybody falls into that category, you need disability insurance. As you get through your working years, the need for disability insurance may not be as prevalent. Maybe you have that 6 months to 18 months worth of assets in your account, or maybe your financial advisor is doing a great job and you've got a big nest egg just waiting for you when the time comes. So you might be able to self-insure to a certain extent. So what I usually tell people is as you're getting closer to 50, 55, and you don't own disability insurance at this point, you're probably not really going to want it anymore. And then I would tell you, you should probably look towards more long-term care or things of that nature. But if you're a young professional, 100% I would tell you disability insurance is by far the best thing that you can buy because it will protect the one thing that you're working your butt off for, and that is your income. So listen, if you got anything out of this, I really appreciate the comments and the likes and the shares. Disability insurance is extremely important. There's a lot of good companies out there that do a great job of offering very sound disability insurance. I represent a handful of them. So if you have any questions about disability insurance, let me know. Put a comment on the video and I'll be happy to reach out to you individually and talk to you about it. I strongly recommend that if you don't have disability insurance, that you talk to your financial advisor or your insurance agent and figure that out and get it. Because again, everything will start and stop with your ability to earn an income. And if you lose that ability, your bills do not stop just because you can't work. And I think we all can understand that. All right, guys, listen, thanks for being here. I do appreciate it. Hope you got something out of it. This is Andrew Perlin with Insurance Explained. Have a great day, and I will see you next time.